Hi, this is Zach here with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Sunday, the 30th of June. Starting on with the FTSE 100, which has failed 2 days running at the 50-day moving average, around 82.30. Below that, we have the risk of the recent support, June support, around 81.10, and then below that, 80.50, which was the initial April peak. RSI is the main negative giveaway here. We've had multiple failures for the RSI actually above the neutral 50 level in the low 50s to mid 50s, and that actually is one of the most negative setups you can have. We'll see if that actually pans out like that. Otherwise, end of day close back above the 50-day line at 82.30 could take us back to 8300 one more time. You can see whether it's just falling below the rising trend channel there from the end of the year, but perhaps not quite enough to redraw the lines at this stage. Moving on to the DAX, and here the picture is of a market which is also trying to hold that rising trend channel. In this case, it's from back in September. RSI still below 50. We've had multiple failures at the 50-day moving average there as well, 18,300. So there is the risk of a test of the 18,000 area and maybe even down to the May support zone, 17,800. But it hasn't broken down yet. The main giveaway, though, failures at the 50-day line and RSI 50. Moving on to the Dow, and here still holding above that 50-day line, which is actually quite a positive. We've had 3 or 4 attempts at testing it, but we've been too strong to test it, which is good. The 50-day line there at 38,800. RSI at 53, which is positive as well, and the floor of that channel on the daily chart from back in the autumn around the same level as the 50-day moving average, 38,800. So ideally we stay above the floor of the channel and the 50-day line. Risk of 38,000, but hopefully so far we can get away with it. Moving on to Bitcoin, which has been the sick child in terms of the markets here. At least we are holding above the 50-day line, rather the 200-day moving average there at 58,000. Above that, trying to break recent resistance around 62,500 to take us back to the 50-day line, but we really want to be back above that 50-day line to feel comfortable, and obviously we don't really want to have another test of the 200-day moving average area at 58,000, even though at the moment I suppose that seems to be the most likely scenario. Moving on to gold, and here the picture of a market which briefly dipped below the notional floor of that rising trend channel there. That's from basically back in December. That is around 23.30, so we're above that. We want to break the May resistance line and the 50-day moving average, 23.60, to feel that we have the energy here to get up to another retest of the record highs, 24.50. RSI still on the wrong side of 50, so it's at 48 at the moment. So really want to see the 50-day line and the March resistance line broken before assuming that we can avoid a retest or a test of May support at 22.80 or so. Moving on to the stocks, and a rather satisfying stock to start off with, which is Avacta. Here we managed to bounce after that break of the April resistance line there around 40 pence. We then bounced just below the 50-day moving average, which is now rising. That's a positive that it is rising, and hit the initial target here, 53 pence. Above that, on an end-of-day close basis, looking for up to 63 pence, and maybe even filling the gap up to 67 pence, that gap down from back in February. Only an end-of-day close well below the late June peak there, 48.5, really upsetting the idea of ongoing recovery there for Avacta. So pretty impressive so far, I think, given the fundamental lay of the land. Moving on to Bushveld Minerals, which came out with an RNS, I think, just after the close on Friday. Probably better not to look at that RNS, but the charting interest here is the way that we've broken back above the old May support there around 0.46, and certainly that gives us a bear trap reversal. Looking for the shares initially to get up to a penny, although obviously it depends on the reaction to the RNS. Best case is up to 1.5 pence, but the key here, whatever happens, is to hold above the May support there, just below 0.5 pence. But the reason that we're bullish from a technical perspective is the way that we had lower lows for the end of June, but a higher RSI trace. So it's a bear trap reversal with the backing of a bullish divergence in the RSI window. In fact, the RSI also above neutral 50 as well. But it's a battle between the fundamentals and the technicals there. Haven't looked at Challenger for a long time, but it seems that we're still in this rising trend channel from back in September. For the channel, they're currently at 0.12 pence. Above that, looking for up to 0.19 pence by the end of July. Another stock which is pushed above its RSI 50 level the first time in nearly a couple of months. So that is quite encouraging. Onto a stock which maybe is not doing that much at the moment, but just gives off a good vibe. We can say that, by the way, that Deltex is well above its now rising 50-day line and also has pushed with a decent set of candles this week above the 200-day moving average at 0.14. We're looking for the shares to hit the top of the rising trend channel from back in the autumn as high as 0.2 pence by the end of July. Ideally, we stay on the right side of 0.14. In the meantime, that's also the 200-day line level. Good to see Firering start to make some positive moves here. I can see that the company's delivered one or two interviews as well in the recent past, but we've got a bear trap gap reversal here, which is a bear trap from below the March support there. 3.1 pence and the gap higher normally is a decent sign that the bears are getting a bit tired, let's say. Rising trend channel base there and above 3 pence, looking for up to 4.25 pence by the end of next month, but that is a classic turnaround pattern there with Firering. Had a good run up earlier this month for Helix Exploration, obviously listed at 10 pence, the peak 27 pence. Looking for a line of resistance there from earlier in the month around the 23 pence level to be broken. Going to end of day close back above that, then it should be 30 pence hopefully later in July. Ideally, there's no breakback below the 50-day moving average at 18.5 in the meantime. As you can see, in recent days, we've bounced above that 50-day line, which is normally a leading indicator on further upside. On to Mosman, where I've changed the charting situation. We had all our previous targets there, but looked rather messy now. So we've got a rising April trend channel here. Top of the channel there up to 0.69. And looking for that while we're above the floor of the channel here, basically now 0.4. So hopefully Mosman will deliver the goods. Also had another RSI rebound from above neutral 50. We had a similar rebound there at the end of last month, and that obviously gave us a pretty decent rally. So as long as the RSI is above 50, we're feeling quite chipper there. The stock which has covered itself in glory in the recent past is MetalMNRG, and here amazing chart really. We've got a wide rising trend channel there from April, and while we're above recent resistance at 0.25, looking for 0.4 pence by the end of July. Obviously the rally there started with an unfilled gap to the upside, and we basically kept going on that. Stock which is not quite so familiar is Mercantile Ports, but I was impressed by the way that the shares managed to close above the 200-day line there at 2.1 pence at the end of the week. They haven't been above the 200-day moving average for basically best part of 3 years. So this is significant from a technical perspective, and while we remain above post-February resistance at 2 pence, looking for up to 3.5 pence here by the end of next month. Obviously that would fill the gap there from the start of the year at 2.6 pence, but not much to go on there, but looks quite encouraging nevertheless. It's the second time I've covered the next stock in the recent past, National World. Here we've broken through recent resistance, or at least gone to new 2024 resistance, 17.75. Above that, looking for the shares to make some decent progress here, probably the top of that rising trend channel from back in the autumn up to 23 pence by the end of July. The other thing to note is the way that both the 50 and 200-day lines are now rising, and that suggests that we're in the run-up to a golden cross, and the run-up to a golden cross tends to be the strongest part in the cycle. So it's already seems to be working. Let's hope it continues, especially while we're on the right side of the 18 pence or the 16 pence area rather over the near term. Haven't looked at Netcall for a long time, but this one was too good to resist. Here we've got a break through the 50-day moving average and also a rebound off a rising 200-day line. That suggests that we're in a pretty strong mode at the moment, looking for 105 by the end of next month at the top of that rising trend channel from back in September. You can see that the recent rally started in December with the unfilled gap to the upside, and that gap remains unfilled even to this day, which tends to be a positive signal. Now looking at Premier African, which I suppose fundraisers permitting. They can't really have ones over the weekend, I presume. But here, just a couple of points to note. One is that we're in a falling wedge there, the top of the falling wedge, 0.11. If we break that, then it could be up to the top of the triangle there from the end of May, as high as 0.14 during the course of July. And we're backed by an uptrend line in the RSI window, so that does suggest there's a bit of accumulation going on here, over and above the key reversal to the upside that we saw for the shares, or from the shares on Friday. But obviously this stock tends to pull the rug on many occasions and has done. On to the last two. First one is Triad, and here you can see a narrow rising trend channel there from October. To the top of the channel there, heading for 365 pence. We're looking for that by the end of July, while we remain above a combination of the price channel floor and the 50-day moving average at £2.76. Ideally, there's no end-of-day close back below recent resistance at £2.97. Finishing off with another strange name, which is Team PLC, and here we've got a potential, or the potential of, a broadening triangle base. There's a bullish divergence line there as well, backing the idea of a recovery, and looking for 20 pence plus by the end of next month. But I suppose the real sizzle here is that it looks as though we've finally got a turnaround after months of a bear market. That's it for me today. More updates during the week.